Hello, today I wanted to share with you some new information as it relates to charitable contributions and some of the tax benefits that you receive from that, as well as if you were living in a state that has high income tax and high property taxes. So there was a new ruling that was quickly rushed out and gave very little time to kind of plan around, and it impacted a lot of people negatively that make charitable contributions. The deductions and credits now that you receive from the state and federal level are going to be impacted where you're not going to receive as much of a benefit from the federal standpoint due to these new rules. I'll add in the comment section, I'll link to a story that's provided by one of my CPA buddies, so you can kind of get an example of how that works. Additionally, this isn't addressed in the article, but why this came about and why it was so abrupt and quick is because it's a result of the IRS trying to block a loophole that states such as California and New York were trying to implement to take advantage of some of the credits and deductions situations of those charitable contributions. So if you weren't aware, back at the end of 2017 when the tax reform was placed, although it did help everyone by reducing the tax brackets, there was a negative outcome as far as there being a deduction cap on state and local tax, also known as SALT deductions. That cap was placed at $10,000. That's a very small cap when you factor in some states have really high property tax as well as high income tax that they pay, that typically they would have been able to itemize for their deductions. But with there being a cap at $10,000, it negatively impact people that technically would have more than that $10,000 cap. So what states were doing is they were scrambling to come up with different workarounds and ideas and loopholes of how to make sure the state still receives what they needed to as far as that income and revenue standpoint, but then still be able to deduct it like they normally would have before the new rules and that new cap would occur this year. One of those things that they were going to try to do is use those charitable contributions in order to use that as a loophole, and that's why, unfortunately, with the changes in the IRS trying to stop those loopholes, it negatively impacted those that are charitably inclined that were used to receiving a better benefit than they will be received moving forward. So again, check out that article and the example so you can see how it impacts you if you are one that is charitably inclined and was used to doing charitable deductions with your itemized deductions. And also, if you haven't been following the new tax reform and how that may impact your charitable contributions, I definitely recommend you speak with a CPA to see how the new tax law is going to be impacting you moving forward. There's definitely an impact to a lot of people, and so there could be new strategies in place that you should be implementing. Hopefully that's helpful information for you, and stay tuned as I try to regularly provide new information as it becomes available. Take care.